It's time for another easy breezy portfolio update. If you're new to the channel, I focus on investing exclusively in advanced technology and disruptive innovation, so I mainly research growth stocks even when it hurts. In fact, these exact stocks have been hit the hardest over the last year, to the point where the only way I can actually look at my portfolio is by sitting in a bathtub and softly crying into a glass of wine. It never gets old. So in this episode, I'll share the absolute carnage going on inside my $100,000 portfolio, as well as my thoughts on Meet Kevin's decision to get out of his. Yeah, I know. I'm always fashionably late to the party. Your time is valuable, so let's get right into it. Here's something that you may not realize about investing. A substantial amount of retail investors really started taking the market seriously around when the pandemic hit. That means they've only experienced a stock market where interest rates are near zero and prices have been propped up by the Federal Reserve and Jerome Powell's legendary money printer. As an investor, this would be like learning to surf in the smoothest, most perfect waves on the planet for nearly 2 years. Then one day, you start to experience riptides and undertows for the very first time. What you need to realize is that good surfers don't take every wave they see, even if that wave looks great on the surface. They learn how to read the water and protect themselves from getting dragged under. They have a systematic way of making decisions, a model to evaluate each wave. Like different kinds of surf, different kinds of stocks require different models, which is why I always stay so narrowly focused on advanced technology and growth stocks. Instead of keeping their eyes on the water, bad surfers tend to watch other surfers and then try to chase the same wave as everybody else. What they don't realize is that by the time they notice good surfers catching a wave, it's often already too late for them to catch it themselves. These are the investors buying stocks that already rallied and selling stocks that have already crashed. Not having a system is a serious double whammy when it comes to growth stocks, which are much more volatile in the short term because they're much harder to value over the long term. Investing in growth stocks is like surfing in the choppiest waves. If you're not prepared, you will get shaken out. I think what none of us really expected is for Meet Kevin to get shaken out last week because, well,
I am 100% transparent with absolutely everything I do in my portfolio. If you join my Stocks and Psychology of Money program, you will learn to think like I do when it comes to the market. And to me, this is a signal of the freaking bottom. This is a signal of the bottom. Be careful with margin, but I am bullish on this market. I'm not going anywhere. I'm not effing leaving.
That clip is from just a few days ago on January 18th. Meet Kevin is a very influential finance YouTuber with around 1.8 million subscribers. He's a good surfer. Right after he made that video, he changed his mind and he packed up his board. I get it, you can only get thrashed around for so long before you want to call it a day, especially when you're riding a $20 million wave.
I've sold 99.15% of my stocks and my entire crypto portfolio.
After watching his full video, I think he did a great job explaining why he thinks the weather sucks for investing and what he's waiting for. Institutional sentiment on growth stocks to switch from fear to greed, inflation numbers to come in lower than expected and stay stable, and for the Federal Reserve to loosen up on interest rates accordingly. It's the same bad weather everyone else has been warning about for months. So what I want to say to Meet Kevin is, best of luck. I hope you enjoy your breather, and I'll see you when you get back in, if you're not back in already. After seeing any good investor pack it up, it makes sense for us to ask ourselves the same question. Do I stay in these choppy waters, or do I follow his lead and go home until the weather clears? Let me show you what's in my $100,000 portfolio right now. I'm getting absolutely battered out here. I have less than $10,000 left in cash, and I've spent the other $90,000, which is worth just $60,000 right now. So I'm over 30% down on my investments, even if you include my cash position. This is a rough start to my 5-year portfolio project. But it's important to remember that these are unrealized losses on money I'm happy to invest for years to come. I'm still holding every single share I've purchased, except for Peloton. Sorry, Peloton. Let's take a look at some of my holdings in a little more detail. My position in C Limited is down by over 40%, but what you may not realize is I didn't buy C Limited anywhere near its top. My average cost is $244 per share, but its peak is over $370 per share, so the stock is actually down around 60% from its all-time high. By the way, C's revenue is up 120% year over year. Next we have Teladoc. My cost basis for Teladoc is $102 per share, and it's trading at $73 today, so I'm down over 25%. I started buying when it was already 50% off from its all-time highs of almost $300 per share. While its stock has been in freefall, Teladoc's revenue is up 80% year over year. Upstart is my third biggest stock holding. My average cost is $163 per share, and it's down to $92. Yikes, looks pretty bad, right? Well, 3 months ago when I started this portfolio, Upstart was trading for almost $400 per share. So I started buying it when it was already 50% or more off of its highs. By the way, while Upstart stock fell by 75%, their revenue is up almost 250% year over year. Are you starting to see the pattern? Palantir, Stone, Square. You can go down and down this list and see that no matter what kind of investment it is, gaming, telemedicine, cryptocurrency, data analytics, fintech, cybersecurity, hardware, they're all down by double digits, even though their top line, and in most cases their bottom line, grew substantially, even on top of all the extra growth from when the pandemic hit back in 2020. So even though Meet Kevin is right and the weather is terrible for investing right now, advanced technology is still solving real problems in the real world. Said another way, Meet Kevin got out because these stocks are still doing bad. I'm staying in because the underlying growth companies are still doing great. Even if the stock market isn't reflecting it at the moment, all of this growth is proof that the solutions these companies are providing are really getting adopted faster and faster. That's why these stocks are the entire focus of my channel, and one of the biggest goals for my portfolio is to compete directly with ARKK, ARK Invest's flagship innovation fund, not the S&P 500. Here's how I'm doing so far. I started the portfolio on November 1st, and since then the S&P 500 is down about 5%. I'm down about 30%, and ARKK is down about 41%. I basically have 3 advantages when it comes to competing with ARKK. First, I can pick as few stocks as I want. So I have 19 stocks in 2 cryptocurrencies instead of the about 45 positions found in ARKK. Second, I can hold as much cash as I want. So I've been slowly dollar cost averaging in instead of dumping it all in at once in the beginning, like many people suggested. Don't do that. And third, I'm willing to hold any size growth stock, so I have positions in Google and Facebook and Nvidia, and I might start a position in Microsoft down the road as it's another great metaverse play. So even though I'm at least twice as concentrated in growth stocks as ARKK, I'm still less volatile overall, at least over the last quarter. That's been helping me sleep at night even as things continue to trend downwards. My conviction in these companies and in the way I've weighted this portfolio has not changed because the underlying companies and their fundamentals haven't changed. So, where I disagree with Meet Kevin is that I think the conversation should be around which stocks to buy, not which ones to exit. That exit window was back in November, and every investor who was paying attention saw that coming, including Meet Kevin.
But I am bullish on this market. I'm not going anywhere. I'm not effing leaving. I've sold 99.15% of my stocks and my entire crypto portfolio. I've been extremely consistent.
So comment below or tweet me at tickersymbolu with your thoughts. Is it time for me to finally get out of growth stocks? Should I exit these companies even though their revenues and user bases are growing by 50 to 100% or more year over year? Or do you think I should add another 50,000 to the portfolio to celebrate the channel hitting 150,000 subscribers? I'm definitely willing to keep putting my money where my mouth is because I'm in it for the long term. Long term meaning years, not weeks or months. So, in Meet Kevin's own words, I'm not effing leaving. So, if you want to keep up to date with trends in advanced technologies and growth stocks, or you just like seeing a portfolio more in the red than your own, consider liking this video and subscribing to the channel with all notifications turned on. That's a great way to invest in the channel that invests in you. And if you want to see what I've been buying, selling, and holding day by day instead of month by month, consider supporting the channel as an insider tier patron on Patreon or channel member right here on YouTube. That way you get access to all my past and present buy and sell alerts, as well as access to an insiders only channel in my Discord community, where we share a lot of research and trades. If that's not really your thing, no problem. There's never any pressure to support the channel, and I always show my research and updated holdings for free right here on YouTube. I've also been slowly posting more and more content on other social platforms like Twitter, Instagram, and even Spotify. So if you're interested in more short form content, you can find my stuff on all your favorite socials. Just search for ticker symbol U and make sure it's spelled correctly because there are a few scammers out there pretending to be me. Either way, there's a lot to be excited about when it comes to investing in advanced technology this year and well into the future. And whether you decide to sell out, buy the dip, or simply do nothing, I hope you stay long, stay strong, and thank you for watching. Until next time, this is ticker symbol U. My name is Alex, reminding you that the best investment you can make is in you.